Hello, everyone. Welcome to Arbitrage Trade Analytics. I am Royce Wells, and it is January 30th, 2022. This past week, we had quite a violent sell-off in the U.S. markets, as well as in the Forex markets for everything that was versus the dollar and versus the Japanese yen. And even cryptocurrency, Bitcoin went from I want to say 47 all the way down to about 35 in the last 7 days. So now basically the question is, okay, what's next? Where are we going and why? So I'm going to start. I'm going to look at the U.S. stock market first. So I got that guy up and going in. We're basically trying to see if he's going to hold this particular mean line. He pushed himself into the red on the weekly chart, but now the big question is, all at the end of the week, last week, Friday, Thursday and Friday, SPY tried to actually pick itself back up. And in doing so, back here, so we saw the last Friday of the week, he decided, nope, I may not want to go down that far and I may want to pick myself back up. The question is, has he gone too far too fast? Will it be enough, or will we continue to rise back up? Because Friday, after basically shedding about $30-something, I want to say, over the last few days, he basically recovered 10 of those quite quickly. So looking at this on SPY for the U.S. stock market, that's the S&P, the spider for the S&P 500. This guy looks like for the weekly, he is still wanting to, basically he's wanting to pick himself up. So this rally is pushing us up from that high. We're basically found our way into the sweet spot, and it even changed the course of the Z. That's for the weekly that was sitting up there. It's like, you know what? I'm going to push just a little bit up. So on the micro scale, SPY can actually make it all the way back up to about 454 before it will be forced to come back down. And this is, of course, at the 1 minute time frame. So basically, this is, okay, if we gun it Monday, Tuesday, there's a possibility that we will come back down towards the end of the week, but I am expecting Monday and Tuesday to be basically very, very gun-ho. We are rallying. We are going back up. Let's go look at the Vix indicator for the S&P 500. And looking at this guy, we see that basically we made it all the way down here. I'm going to go to the 5 minute on this guy as well. 5 minute, which means basically this is an infinity band on the 5 minute time frame. This should be good for about, I want to say, 3 to 4 weeks at the 5 minute time frame. Basically, he got down here, he tripped the dollar sign, finding support on the mean line of the infinity band. We may get a retest, but overall, because this is a volatility measure, as volatility goes down, that means more than likely a rally is beginning. So all of the pain and stuff that we sat through over the last few days, that was everything basically getting above that red line for the volatility index. Let me bring the screen over so you can see all that. So basically, the huge fall that we had starting around the 13th of January all the way to where we were and where it basically gave us our cross with volatility at 38%, or $38 rather, and then coming right back down. It topped out the infinity band on the 1 minute time frame and the 5 minute time frame, saying, okay, we can't maintain this, we have to cool off, and that's exactly what it's going to be doing now. We're expecting a cool off before we do anything else. Volatility can get back to about 30, but that means there'll be a little bit of a spike, maybe a little bit of a sell-off. But overall, ultimately, I am expecting volatility to die down and the markets to rally. All right, we're going to look at QQQ. QQQ is not any different. Basically, we are at the bottom of the infinity band on the 5 minute chart saying, hey, we're starting a rally. The next point to get past is 355. If we can get past 355, we have nothing but blue skies up above us. And quite possibly, he can even make it all the way up to 411 within the next 2 to 3 weeks if he rallies hard. Looking at TQQQ, this is the pro shares of QQQ. And basically, this is in favor of QQQ. So basically, if QQQ is happy, so is TQQQ. But this is measuring basically the pro shares of the volatility, more or less, of this guy. So once again, sitting at the bottom of the band, the 5-minute RSI is saying, yep, we're ready. And now we're just seeing if it will follow through. Okay. If we get any resistance, it'll be right at roughly 355. All right. IWM. This is the Russell 2000 ETF. It hasn't quite made it there. It's basically sitting in the middle of the sweet spot, but basically ran out of probability before we thought it was going to be able to. So it is sitting in the sweet spot. So we're watching this guy to see what happens. We also see that the weekly on this guy is sitting. This week it pushed the weekly into out of bounds. So if I bring this guy back over here, we'll see, yep, we went out of bounds. And basically now he's trying to pull himself back up to bring probability back within reason. So I'm expecting a rally on IWM as well. So looking at these guys, I'm expecting a lot of good things going. If you're not in Amazon, guess what? Now might be the time to grab some Amazon shares with them sitting at about $28.79 and hold them for about a month or so and see what happens from there. On the 1-minute chart and 5-minute chart was basically sitting at the very bottom of the infinity band. We're out of bounds here, which means we should have some pull up that should force all of this to follow through. We should be able to easily make it to about $3,027 roughly before being rebuffed. So basically it's steady as she goes, and let's see if it can pull this off. Look, this is the daily time frame. I'm going to go to the weekly time frame to see where probability is for this band. I'm going to turn on a couple more deviations and see did he touch the second or the third, and looks like he touched both. So yeah, we're out of room, and we're expecting this guy to bounce off of here, pull himself up, and force our hand into a rally this incoming week. All right, Autozone. How have you been doing, Autozone? Autozone basically from the 27th and 28th, it said, you know what, I'm pulling myself out of this tailspin, and it regained a lot of what it lost. It basically regained about $80 or $90 from where it was sitting. It's still sitting solidly on the weekly in a buy trend. Basically, what we saw here on the minute chart over the last week or so was it cooling off. It means now it should be able to hold this compass line and then push straight through it and keep on riding. We still have over a 36% chance that we stay in this uptrend that we're in, and it's better than a 0% chance that we have of a negative happening right now. So we're still looking good, still looking great for this guy. I'm going to play with CVM because CVM has been a lot of heartburn for a few of the members here who basically got caught up in something when it fell from like $20 all the way down to about $8, and now it's currently sitting at about $5.72. Basically, we need to get over the 593 mark to basically begin the next rally and to basically confirm everything where we need it to be. It needs to be over 637. If the compass line can't make it over that line on the 1-minute or 5-minute chart, there's no way longer term we can expect a uptrend. So basically, we're watching this guy, and with the rally that's supposed to be incoming, we should see a little bit of motion on here. So if you don't have an alert set for CVM, you might want to set one somewhere around 593 and see what happens if you're trying to get in as soon as it crosses over the apocalypse band center red line. Okay, RMEV. This guy has seen better days for sure. He was trading at close to $8 somewhere in the middle of last year, got all the way up there, and then basically sold off brutally. We're still sitting at the very bottom of the band, and basically nothing has happened yet. So watching this guy, with the amount of volatility that we currently have, he's sitting at 95 cents. He has a top out somewhere around 1075 if you're still holding on. The only problem is he keeps pulling moves like this where he goes out of bounds and it basically keeps forcing us back down again and again. So he needs to change what he's doing overall for us to see some really good come out of our MED this upcoming year. International paper basically has been selling off roughly since October, and hopefully you got clear of it when we said about 60 or so. Turn back on the Atlas. Somewhere around, I want to say, make sure you set to the right time frame. Primary time frame should be weekly, and hit there. And that should change where our X and stuff. So yeah, somewhere around here, he marked an X, and basically he's been selling off ever since. So roughly, we saved yourself about a 60 or 15 or so dollar haircut, and basically we're just waiting to see where it is. If you are swing trading this, or possibly basically playing the odds on the short-term time frame, the lowest you could have possibly picked him up was at about $45 per share. And basically, he's been trying to pull himself back up. He moved about $2 this past Friday when everything rallied really extremely hard. Let's see if he can keep it up. He didn't do it too quickly, so probability is still in his favor for him to be able to maintain this upward trajectory. So we're just watching to see what happens next. If there is a rally to the upside over the next month or so, I would expect international paper to get to about 52.61 before possibly getting rejected. That would give us our test, our cross and retest. So I'm looking for that to see if that will happen. The RSI line or the mean line of the arbitrage band can reject this trend and push us back down. So if you're nimble, you might be able to pull about 6 to 10% off of this trade. But if you're not, and if that's too scary, then definitely don't get into it if that's not the speed that you normally trade with or at. All right. Looking at US Steel. US Steel has had quite the haircut, but it gave us dollar signs telling us that it was going to be pulling up this last week. The week before, it was brutal, went from $25 all the way down to about $19. This last week, it pulled itself up. It actually gapped down and then pulled itself back up from 16 back to 1954. So we're watching this guy on the shorter time frame using the infinity band. We are just beginning a new uptrend for US Steel. So this might be a very good time to get in. We do have spring and summer coming, so basically everyone needs steel to build. So, and this is the season to start doing that. So you might want to be able to just ride this guy as a seasonal and get some of that. Meanwhile, blue, basically it's a biochem. Some people like playing biochems. These are some of the ones that I've been playing over the years. Roughly from around 2016, I've been playing this guy up and down, and that's why I'm mentioning it here, because he really, if you like shorting blue was an awesome thing to short. But it looks like on the 1 minute chart, he might have a little bit of up, and that up could equal about $1.30 or so. So hey, that's not a bad pull for if you want about 10 or 15% on this particular trade. He did get here too quickly, so I want to see if he can basically cool off just a little bit. So it means you might be able to get them around 720-ish. And then from there, you should be able to ride. Okay.
Hey, Royce.
Yes, sir.
You said 1 minute chart, but it's on the 5 minute, just FYI.
Okay. Well, sorry. 1 minute, 5 minute. I actually zoomed out just a little bit for the people who are playing it just a little bit longer. Sorry about that. But this is a 5 minute infinity. So basically this on the 5 minute, if you're using the 5 minute infinity, like I said, it's good for about 3 to 4 weeks if you're trying to trade within a month. If you're using the minute chart, it's good for about a week and a half max. So it all depends on how fast you're wanting to take profit. That determines if you're going to be getting in or getting out. Also remember that if an uptrend buy trend can't begin on the 1 minute chart, it won't succeed on any other time frame as well. This is literally like the second hand to a clock. You know where it's going because it is dictating the speed and course of everything and where it's going based on the bands that are associated with it. So this micro view and macro view on the 1 minute chart for blue, him getting above both of these lines is crucial for the 1 minute chart to begin the uptrend. And the 5 minute chart is already basically actually it's trying to confirm that we can make it above that 770 before we can do anything else. Okay. All right. I'm going to now switch gears just a little bit, and I'm going to switch to the crypto side of the house to see what's going on. We're talking about rally, but look at all the red that we see so far. Just opening these charts. Crypto trades 24/7. So let's go look at Bitcoin real quick to see where we are. Let the charts draw. Bitcoin on the weekly time frame is not in a happy place. We're sitting squarely in a sell trend on the weekly time frame, squarely in a sell trend on the 5 minute chart as well. And we have not trespassed below. We touched it one time at about 37,000 at about 2 o'clock today. But basically, if it and when it crosses under 37,478, that's when the pain actually should start. I'm expecting like my basically 1 month projection for Bitcoin is to basically have it hover between this 37,000 to about that 34.9 area for quite some time. Looking at the 1 minute chart, we can basically try to predict what's going to be happening for the next week or so. It should try to hold this 36,900. So there's about $800 worth of wiggle room within this guy. Everything is still quite red. So basically, just don't be there and you won't get hurt. Looking at Ethereum on the weekly time frame is getting really, really, really close to tripping into a longer term sell-off. 4 weeks ago, we got the X over here saying that a sell-off was beginning. We got our take profit. That's actually where I took profit, right at that 4,700, right in November. And from there, basically, we've been watching this guy fall. He's basically now seeing about 50% of where he was, or roughly 45%. He is sitting squarely red in the sell spot. So I am not expecting Ethereum or Bitcoin to slow down on their sell-off, even if the U.S. markets do rally. So I'm gonna keep on going. I'm gonna go look at Litecoin. Litecoin basically tripped the sell 2 weeks ago. Still, now it's even under the sweet spot. Everything is still saying we're heading down. This is the 1 minute. This is the 5 minute. Everything is saying this is just the beginning for Litecoin sell-off. So please don't buy in thinking it's the bottom when clearly we've been selling off for quite some time. When this guy was at about 270-ish, things got ugly, and that's about the time we sold Ethereum that basically triggered our sell. And if we basically, hopefully you guys jumped out when we jumped out to make sure that you maximize that opportunity, right? Looking at CRO-USD, we're at a very, very important, crucial point in this particular cycle for CRO-USD. They had about 400 accounts get compromised over the last month or so that they admitted to, but they're trying to run alongside Visa, and they just bought that stadium in Los Angeles and renamed it Crypto.com Stadium. It's right now, I believe it's still fairly at a good price. Let me bring up the other chart and see where we are. So on this is Bittrex. They've been following CRO longer than Coinbase has, so we have a little bit more chart to look at. On the weekly time frame, this is still a buy trend. Even with all the red and stuff that we've seen, it is still a buy trend. The RSI line is still saying we're good. And basically, even when it pushes as high as it did, when it did fall on this at this time frame, we basically are finding our way down here too quickly, which should give us some more lift and allow us to keep basically pivoting off of the support lines and continue our trek up. also, with this stair step up that we're seeing, we notice that the apocalypse line is coming out of that danger zone, allowing us to have more room for more up. Am I expecting great things from Crow right now? It is, especially, no, not this week in particularly, but in the near future, yes. Shiba Inu, basically, it got to about, I want to say, 6.6.000, I want to say 8 actually. Yeah, 88. And basically, some people took profit, some people didn't. Some people joined right at about that time saying, hey, it's going to go this and going to go that. And then it basically decided not too horribly. Well, guess what? It's still saying the same. The weekly is trying to stay positive, but it's not looking good. 3 weeks ago, it put our first X on here that said sell it, not buy it. So we had our buy X, wrote it, and then basically now we're looking at this X down here, and things are looking, it's a weak sell trend, but it's still a sell trend. So maybe it'll hold the line. To get into a buy trend, quite literally, it takes less than, pardon me, about 0.00023, I believe, is the magic number to basically get us back into an uptrend. So it's not a far stretch of the imagination for us to get there. It just will take a lot of patience because currently everything is looking quite red for Shiba Inu. Meanwhile, Doge basically has been selling and selling and selling. Once it crossed under the apocalypse line and the mean line for the infinity band on at about 9 this morning, it just continued to sell off. So we're at 14 something, and basically it's going down, but it looks like it's running out of room over here. On the weekly time frame, there's not enough data, so I'm going to basically pull back to the daily, and it's not quite out of room. And let me switch this guy to the daily as well. And we'll just see what our odds are. So basically, it's still hovering in a not safe place to buy or purchase. So basically, sit on your hands, wait, and we'll get there. All right. Now let's go into the meat and potatoes of this and see basically what's going on across the global Forex market. So the Forex market this week has been very nice to everyone playing against the dollar and who have been in a sell. So, or rather playing with the dollar and against all other currencies. Looking at NZD, USD, basically it had a tumultuous 7-day or 6-day fall. Basically, it fell from great heights and just went through the floor. Can it do more? There's a dollar sign here. That means there is a pullback coming. Don't get caught in the thresh of that pullback. Basically, the next thing we should see is a red dollar sign. And typically, that red dollar sign is followed with a green candle, which means a day of nothing but up. So if you're already out of NZD, wait for it to basically cross the line. And if you're basically waiting for more sell-off, just be aware that we are out of probability down at this time frame. So that means that pull-up, we are almost destined to have a pull-up. Don't try to play this guy down until at least he resets. And a reset for me means I'm touching at least the compass or the RSI line on the daily or weekly time frame, because I don't want to be first. I just want to make money with as little stress as possible. Right? Looking at this guy, I'm going to go to the 1-minute chart on NZD USD. Yep, 1-minute chart is saying, hey, guess what? We're in the danger zone. Infinity, we basically already got our buy for the people who are playing very close to the wire. It's already warning that a buy trend is coming. So basically, don't miss the fact that it is coming. If we basically rally hard, I'm expecting this guy, he could actually give up about 210 pips to the other side of the spectrum before allowing us to go back down. So don't get caught up in that if you're not already in that. And if you are, just wait for the sell signal for us to get more of it. Okay. AUD USD. This guy is triggering a buy on the 1 minute time frame. The 5 minute time frame, that's what this RSI is. This is the 5 minute versus the 5 minute versus the 4 hour, I believe, on this time frame. No, actually, I'm sorry, it's a 15 versus the weekly. I moved it up a little bit. Okay, so on the 15-minute chart, let's go look at that guy really quickly. 15-minute chart. Yeah, we got to the bottom of the band, and basically it's saying we have to come back up. So it's trying to pull itself back up. If I move this guy to be an arbitrage band on the 15-minute, we should see that we have tripped a buy on the 15-minute to allow us to basically see what's going on. So 15 minutes saying, yes, we are going to possibly a week's worth of rally on this guy. So if you're not in here, don't play in here for up, because basically technically you're going counter the trend. Wait it out and let it come back to the sell trend and then just win. We don't like to get you guys into trades where basically you have to take a loss. And if you possibly enter a trade that's going counter the long-term trend, that's more than likely going to have to happen. So basically stay with the trend, wait it out. It's always a patience game. And if you're patient, then we win. End of story. Hopefully you guys got to ride some of this with me as well. I know I saw Lee say, I think I put a GBP USD. I had a sell stop in, and basically I was waiting for it. And I think one for GJ as well. And both of them actually paid quite well this past week. So overall, it went down like it was supposed to. But as you can see now, it's trying to make its way back up. I'm going to go back to our infinity band on our 1 minute time frame just to keep our focus where it has been the last couple of weeks. And yes, we are above that line. So yes, on the 1 minute time frame, it is confirmed there is an uptrend that is in progress. And on the weekly time frame, yes, we're still above that line. It's still a weak uptrend, but it is still definitely an uptrend, at least for the next couple of days. How high do we expect it to get? If we're unlucky or lucky, depending on, I guess, your perspective here, on the 1 minute chart, it says about 134.62, which is about 25, 26 pips, nothing to get worried about. However, looking at the mean line, basically where an uptrend would start for the 5 minute chart, we needed to basically get above that 134.80, which that's about 40 or so pips from where we currently are. And if it wants to follow through throughout the week, it could make it as high as that would be an ultimate pain move to go from 134 all the way to 138. But guess what? It's in the realm of probability. We need to see how fast it comes swinging when it comes out of the gate today and tomorrow. Okay. Looking at EURUSD, this guy, waiting for my RSI line to show. Basically, believe it or not, on the weekly time frame, this guy is actually, that might be daily, just making sure. Yep, that's the daily. Let me put the weekly there. So basically, what we did see, come on. All right. Yeah, weekly still definitely there, but guess what? Looks like the daily is basically going to join it. We might not get a pullback on this guy. There's no dollar sign here. So if you're playing or have been playing with this guy, there may be more to come. Basically, we're watching this guy. I'm going to pull this guy up to see where that line, we're not in a danger zone, so there's nothing that's going to force this guy, force the compass line to come up and see this apocalypse band RSI line. So basically, that's sitting at 112. There's nothing forcing this right now, so we could continue to fall. 3 deviations on this guy is about 110.326. If he actually hits there, we should get dollar signs somewhere around there. So that means we have about 110, maybe more pips in this trade if you're willing and patient enough to wait and not get pulled in otherwise. Okay, let's go look at USD Jpy. So remember when I was telling you guys, I think it was last week, it's always a tug of war between USD Jpy the US dollar and the Japanese yen, because basically both of them have been going up. And for a bit, the Japanese yen was rising faster than the dollar, even though both of them were rising, which was making USD Jpy sell off. Well, guess what? The dollar came out swinging this week, basically almost gaining $2, DXY did. And that basically definitely outpaced the Japanese yen's movement and gave us about 200 plus pips on USD Jpy. So looking at this guy, we're still on, the weekly says we're still good. The daily says we're trying to get there. But as long as the weekly says we're good, it's still steady as she goes. Looking at this guy over here, once again, not in the danger zone. So guess what? We still should be able to continue on. The 15-minute is not convinced exactly yet. Let's go back to the 1 minute time frame. And basically, it has to get over 115.41 roughly, so about 20-25 pips to the upside should allow us to actually to safely get into this trend for an uptrend. But if not, if it can't break down there, it may get back or take back just a little bit, but it should find support somewhere near around 114.94.9. So about 25, 26 pips below where we currently are. So not a lot of movement on these guys currently, but that $2 move was definitely a good move this last week. USD MXN. So basically we got to the line, we crossed under, we got our X, we hit the RSI line, and just like that, the weekly said, no, I'm not going into a sell trend. So the daily for the US, for USD MXN is also trying to pull itself up. It has managed to get above the compass line, and we're trying to see if we can get back and stay back above this area. So basically it's flirting, it keeps flirting with the line, but so far has been able to hold the mean line of our infinity band and keep pushing up. So basically it's a slow grind, but it's still grinding to the up direction. So I am expecting a lot out of USD MXN this upcoming year, just based on what the weekly time frame is showing us. Let's go look at FDAX. FDAX had a wicked wick on the weekly time frame. It basically touched the middle of the arbitrage band on the weekly time frame and said, nope, I'm not giving you that, not giving you that satisfaction. The only problem is it has basically, because of these three sell-off candles, it has pushed the weekly RSI for the arbitrage band into the sweet spot, and basically both of them are beneath the sweet spot. We might get a couple of days of up, but overall, I'm expecting the DAX to more or less sell off. We got our X on that time frame, we got our triangle on that time frame, and we have the trifecta with our probability being where it is. So yeah, no dice, sorry. I'm expecting DAX to basically come back down. Even on the shorter time frame, 15-minute chart says, nope, I'm giving up the ghost. Got dollar signs, we're not doing this. So basically, we're watching to see this guy come screaming back down. He needs to break for this to successfully continue, follow through, and continue in the red. He has to get back below 15,295. If that happens, then that should allow us to come on down. All right. So with that being said, we're going to keep on going. Let's look at the JXY and see what's going on with the Japanese yen index itself. We had a nice little bounce off our deflection zone, almost storybook deflection off JXY on the 28th, and basically it's been pulling itself up ever since. We have an X saying that it wants to go back down. Over here, 15-minute chart says, hey, we are ready for some up, even though it's doing it only half-heartedly. We're only sitting at about 17%. I need this guy to at least be sitting at 0.25 to make me put my money in there. But the fact that we did deflect, that usually does mean we should be going up. And this just becomes a retest, and more or less, we get more up from here. The daily time frame says, yeah, I'm game. I want to do this. And let's go look at this guy on that time frame to see what the arbitrage band is doing over there. All right. And looking here, we got on the, this is the daily and the weekly, it's still saying we're underneath. It's trying, but guess what? It's not trying hard enough because daily and weekly still says more down. We want to see if this will be able to pull it up. But currently, this is more or less becomes a cool down. I'm going to go over here, switch to the 5 minute really quickly and see where we are. So yeah, he basically had to cool down. He basically got too far up here, got to about 87.76, couldn't hold it, fell through, and basically he's cooling off, hanging out, waiting for the line to get back down here. So we might not see very much movement from the JPY pairs until like Wednesday, maybe Thursday of this week. Looking at this time frame, let me go back down to the 1 minute to see if we have any other possibility here. Still looking where we are. He needs to basically just hold this, right? If he's able to hold this position, what I don't want to see happen is what I did see happen on SPY most of last week, where the line just kind of drifts. It doesn't really go up. It basically kind of drifts. The band moves up and you wind up back at the top and then you get another leg to the downside. So we're watching this guy. I want to see if he can able to pull it off. But yeah, more or less, I'm expecting him to basically try to drift, but then ultimately come back down. If this guy is falling, that means these four should be rising, right? So looking at this, let's look at Aud Jpy. Aud Jpy, we have our X over here. We got our 15-minute chart saying, yeah, we're ready. The weekly is testing the sweet spot on this time frame. We do have an X here at the same time that it's testing the sweet spot. So the Australian dollar actually might be selling off faster than the Japanese yen, which is also quite scary. But hey, I guess that can happen. So looking at this, we want more. Basically, the weekly chart says basically just brace for it. We're going to get more down. The 5 minute chart is saying we're in the middle of a downtrend. So why are you bucking the system? The 1 minute chart says, hey, I might need to cool off just a little bit. So you might get some relief going into Sunday, Monday, but don't bet on much of the rest of the week being in your favor. We're still quite earnestly sitting in that sweet spot for the longer time frame. Looking at Nzdjpy, not much different. Still going down. All these guys, this is impressive. All these guys are actually selling off faster than JXY, which basically forces them to go lower, even as JXY is continuing to fall. So looking at Nzdjpy, we're there, 1 minute chart. He sold off. Basically, we need to see him get above 75.42 to get any chance at an uptrend. 76.41 is a possibility, which that's about $1 from where we are, or 100 pips or so. So if he tries to gun it just a little bit to basically save himself, which is not out of the question, seeing that the daily has gone out of bounds. So on the daily time frame, we probably would see a dollar sign over here letting us know that that is the case. And I'm going to just verify, because while we trust, we also want to verify. We should have a dollar sign right here. Yep, right here on this side saying that there should be a pullback coming. And yeah, so that pullback will align with the pullback that we're seeing on the 1 minute chart, that basically he's trying to pull himself up out of this nosedive. And let's see if he can. So the New Zealand dollar is fighting against the JPY dollar and may actually succeed in giving us just a little bit of uplift going into the week. Meanwhile, the euro versus the Japanese yen, things do not look good. All the way around last 2 weeks ago, euro versus Japanese yen, yeah, the euro is losing horribly. The compass crossed under. We got our triangle. We're sitting in the middle of the sweet spot on a daily and the weekly. The 15 and the daily are also saying, yeah, this is a sell trend. What are you doing? So guess what? Steady as she goes. Put your sell stop in. Keep riding the ride. Meanwhile, GBP JPY, the Great British Pound, is doing better than the Japanese yen. Basically, its sell-off, even this hard sell-off, hasn't been able to actually push this guy into a sell trend. Both these guys are still sitting quite green, and basically looks like it's trying to turn. So if GBP JPY can get back above this 154.57 area, that should allow the Great British Pound to overtake the Japanese yen and continue this uptrend more or less. So we're watching this guy go up, and from all the way back here, we said, yeah, that should be the case. And basically, he's fighting uphill to get there. He has touched the compass line. He is below the sweet spot. The sweet spot does have the possibility to reject him. But let's see. I'm going to look at just a little bit more to see if anything else is saying, nope. 5 minutes says, yeah, we're good. 15 minutes says, yeah, we're testing. And basically, we have a lot of resistance up here. So sitting at that 154.82, that's the next longer term, basically 3 to 15 day trade. It needs to get above that line if we are actually going to see an uptrend on this guy. So currently he's about 40 or so pips away, and we see if he can make up that ground going into Sunday, maybe Monday. And if not, guess what? More down. We are seeing a green X here, which does show us that the 15-minute is trying its best to get back green. So across the board, long-term time frame for GBP JPY, it's still a buy. It has had a sell-off in recent futures, which means roughly the 17th or so to where we are now, but that still hasn't been enough to rattle it or shake it out of the trend that it's been holding on to for literally almost all of last year. So basically, it's been very parabolic, right? And there's a lot of people that basically subscribe to the idea that W is for winner and M is for murder. When we have a classic up, down, up, and then basically when it gives up, it basically sells off. So we're watching this guy very closely because the compass line is very, very close to that RSI line. So right now, basically, it's too close to call. We're sitting too close in line. This is a weak uptrend, but it's still an uptrend. And it's not nothing is saying it's a sell trend. It's a weak sell trend even on the short time frame, and a weak sell trend on the daily. So everything we're looking at, best I can say is GBP JPY is sideways. So don't touch it unless you absolutely have to trade something. All right. EURAUD. EURAUD, this is the euro versus the Australian dollar. Since the euro is doing bad, but not nearly as bad as the Australian dollar right now. By the way, Australia banned Google Analytics last week, so that was an interesting move on their part. But hey, I guess privacy is privacy. We got a dollar sign on EURAUD saying that basically there should be some cool off coming. We are still in a very strong uptrend for the daily, but I want to see if the next few days or next week or so will basically negate that and change the direction that we're going. Basically, when it fell, it got there too quickly on this 15-minute chart and basically tried to force itself back up. Looking over here, we look like that basically we hit the apocalypse band 1 minute, and basically so far it's been able to hold the line. So far it's not in the deflection zone, which means we could potentially see about 165.98, but not much more than that. So there's about 80, 90 pips in there for you. I'm sorry, 110 or 120 pips in there for you, depending on where you started counting from. Always include my ticks away in that because I'm always doing buy stops and sell stops. So depending on how you want to play it, There are definitely some pips to the upside, as well as a whole lot of pips to the downside. So maybe the euro will slow down. And if the euro is slowing down, that means we should see some more sell-offs on all the other euro pairs as well. So if we're looking for more euro USD to go down, more euro JPY to go down, it makes sense that euro AUD should also be going down if the Australian dollar can manage to basically save face a little bit. Looking at EUR GBP, this is the euro versus the Great British Pound. It's not looking good. The Great British Pound is winning quite soundly. It tried to have a run for it going into the end of the week, and basically has sold off ever since. The weekly and the daily are sitting soundly in a sell, so nothing is saying go buy me. This guy is ultimately in a sell trend, and we're not expecting anything more from that until then. I am expecting, because he's out of bounds and there should be a dollar sign on this guy for this time frame. That's for the weekly, so I'm going to go back to the weekly. And we should have a dollar sign there saying, warning everybody, if you're in this from this X, you should be about to take profit. Yep, there's a dollar sign saying go take your profit, because basically it's going to pull up a little. It has to cool off. That's just the nature of the beast. You let it cool off, and then you wait for the next signal to tell you to get in. Doing that, you should almost never have the ability to lose. EUR NZD, so this is the euro versus the New Zealand dollar. It's actually keeping up more or less the euro and New Zealand dollar. The cheapest of the pairs to play, almost anything with NZD in it is always really cheap to play. It takes $1.70, $170 worth of the NZD dollar to make just €1. So looking at this guy, he has been basically rising, and basically I think he's rising just a little bit too quickly, but so far he's been able to maintain it. Looking at this, he's managed to position himself into the sweet spot on the weekly and on the daily. So I am expecting the euro to still outpace the New Zealand dollar longer term until roughly around maybe 173. So it's about 300 pips more or less still in this trend, maybe over the next month or so. So these guys are moving really slow, which is why I typically don't play the euro pairs when they begin with EUR. Looking at USD 30 USD, we're bouncing. We got this is funny because this is on the daily time frame. This is always the most confusing signal that we can get. I'm going to show you why. So basically, we're going up. We got dollar signs saying we should be going down. But literally, we had 3 straight candles of up. I think they call this a bearish kick because the next candle should be a down candle. Basically, it's 3 candles up and then a red candle that basically solidifies it going down. It looks like a foot kicking a ball down. So with the X here, a lot of people get pulled into this trade because it has 3 straight days of up, and people are like, well, a trend just began. All it takes is 3 candles to get a trend, and then it sorely takes their money quite gleefully. So looking at this X, I am seeing this guy here. I am expecting the US 30 versus the US dollar to continue down. What does that mean? That doesn't mean the entire US market, just the US top 30 stocks may continue their downward trek because they're still sitting where it's very much so possible for them to do that. Will it pull the rest of the market down? I think it's going to be mixed results this week, and we'll see what happens. We'll see how it unfolds. I'm going to actually turn on the Apocalypse Band for this and basically show you what we've been following since all this began. So we got up to 2 standard deviations, we got to 3, and basically it's been going sideways more or less this whole time and basically not being able to break over and doing Elliott waves like, hey, we can do this, we can do this, we can do this, until finally it broke under, and it broke under the compass, and let me turn on the momentum line as well. Breaks on the momentum line, and the momentum line is still leading. Both of these are still pointing down, and because they're both still pointing down and where we're sitting, it's forcing us to basically try to respect that pink line that is our RSI line in the apocalypse band this is the daily time frame. So this has been quite a ride up. So the US30 roughly since July of 2020 has gone nothing but up. And basically we need to see this guy somewhere in the near future touch that 31,444 before basically it's feeling justified, nullified, mollified, whatever you want to qualify, to allow us to continue more up. So basically, I do see in the near future us having it bounce, but for the short term, it's still more or less still down. We're still burning. I'm going to turn on, let's see, this is daily. Let's go to the weekly, just make sure. Yeah, weekly is still sitting way up there in the stratosphere, and he wants to see 22,000. I'm going to turn on one more indicator, which is our dash, which lets us see if anything's in danger and if there's any number that we have to hit/meet to allow us to keep this trend intact. And basically turning this guy on, we've already satisfied that one, but the apocalypse band is still saying, nope, you still have to satisfy that and make that number good. Otherwise, this will not fly. Also, looking at this, once we turn on the dash indicator, we also see that Z Pro is saying, yeah, I'm over 20% negative. What do you want to do? Basically, Z always leads the trend. It's always our odds of winning or losing. So we haven't crossed under the RSI line for the arbitrage band. I'm going to actually turn on the RSI band to see if it has an RSI saying, yeah, we're over 30%, and we cross under that 35,382. So that means if we want to get back into an uptrend, we have to retake that 35,382. So the rally that may be coming, we're about 800 or so points away from that guy. So it's possible you can do that in a day, but maybe about 2 or 3 days. I won't rush it. But at the same time, if we can't reclaim that number, we are definitely heading down. The RSI, if you're basically playing the smaller band on the smaller time frame, you've just set your sail and basically you're letting it come to you with no regrets. All right. I'm going to go look at the New Zealand dollar index real quick to see where we are. Basically, you can't know where you are unless you know where you've been. So New Zealand dollar on the 1 minute says, hey, I want to go up. We have dollar signs saying that a rebound is coming. So New Zealand dollar should be rebounding versus all the other economies going into this week. So don't basically lose sight that the New Zealand dollar may try to rally, which means it's going to be playing tug of war with anything that it's paired up against. Looking at the Australian dollar, it's almost in the exact same spot. It's sitting underneath. We're still underneath though. So yeah, no, the Australian dollar is still saying we're still selling. Don't even think about going into a buy. EUR USD, he's a little split personality. I mean, just EXY rather. He wants to go up. He went back down. He wants to go up. Basically, the compass line is fighting with everything that's in it to basically make it stay above that red line. He has put himself out of the danger zone, which should allow us to get more down, not necessarily more up. He's no longer in danger. And typically a trend will trend until it can't trend. So basically us seeing it there, I'm expecting this guy to continue selling off. I'm still expecting the euro to continue down. Great British Pound, however, is basically giving it its all, giving it its gusto. It has managed to, on the 1 minute chart, find its way up. 15-minute chart is saying, I'm not so sure. So I'm going to go over here, look at the 15-minute chart, bring it down. It needs to get over that 134.14 area to basically allow it to continue to be an uptrend, at least longer term. If it can't, which I don't think it can, it should push itself back down. The only thing is, like I said, we're always fighting against the other currencies. This is the thing that basically we've been following for quite some time. This is the weekly apocalypse band. The Great British Pound, when we were playing with that idea called Brexit and everything, and basically when it passed, that allowed us to basically say, okay, fine, it passed. But that literally drove us down, did not allow us to make it over that pink line. Us making it, Great British Pound making it over 140.16 will basically trigger a massive change in what's going on in Great Britain. So if we can actually have enough initiatives in Great Britain to do that, that should allow us to see nothing but profit for the unforeseeable future. Because once again, staying on that line basically almost guarantees years. This is 5-6 years of nothing but down. Getting above, likewise, nothing but years of up. So crossing that line is a very, very important thing for Great Britain for it to actually make it into a longer term uptrend. So we're watching it very closely. But as of right now, it's basically trying. It's having another go at it, as they would like to say. And we'll see if it can pull it off. But the first line of defense is getting above that 134.14 and then getting above that 135.34. All right, guys. That's all I got for you guys. Do you guys have any questions before I let you go? All right. If not, Abdul should be on at about 6 o'clock Central Standard Time to basically give you guys his forecast and all things that he's following. Make sure you guys turn in. Appreciate you guys and have a wonderful week trading in the markets. Bye-bye.